Welcome back to corporate accounting class. Today we are going to discuss profit prior incorporation chapter, and this is the continuation of previous class where we had discussed the concept of incorporation. We understood what was incorporation, and we also understood what we are going to do in this particular chapter. Right, I'm just going to give a small gist of that here. We are going to find out whatever profit or loss business or the joint stock company has incurred before incorporation, that is before registration of that particular company. Incorporation means company getting registered with registrar of company. As I said in the previous class, it's just like how you get registered in college after you get admissions on and only until you get your admissions you will be you will be registered in your college. You will be a student. So only after the admissions are over you will be called as a student. Here we are just like that. A joint stock company has to register itself with someone called as registrar of the company, which we had discussed detailedly in previous class. Okay, now that we have seen, what we will do here is finding out profit or loss before the company was registered. Now we will see how are we going to find out profit or loss. It is very simple and very easy, and it's common sense, right? So how do we basically find out profit or loss? With a very simple formula. What is the formula? Income minus expense. Whatever income the business has incurred, if we deduct the expenses that the business incurs, we will get the profit or loss of the business. Correct? Now we are going to use the same basic formula for the whole chapter to find out what? Profit prior incorporation. Very simple. Now I am going to explain the format here, and I am very sure most of you remember the format of P&L account, right? But I am going to give a small gist as to what we will do here. Very simple. We are going to expand this formula. Okay, what is the formula? Income minus expense equals profit or loss, right? So we will first note down whatever income the business can earn. What are the types of income a business can earn or a joint stock company can earn, right? So if the business is earning income from its business activity, we call it as revenue from operations. Correct? So revenue from operations as in from business activity. Business activity means sales. Correct? So from sales, what do we get? We get gross profit from sales. Excuse me. Then apart from this one source of income, we can have any other source of income for a business. So we will note it as all other income will come under this this second heading. So the first heading is from sales, the second heading is from other income, and we will sum this up and we will call this as total income, right? So I have just expanded the formula here. What was our formula? Our formula was income minus expense will give us profit or loss. So I have expanded income here. We will see the expansion of expense. from total income, what are we going to do? We have to minus the expenses, correct? So I am going to less all the expenses, right? So expenses. Now, a business can have multiple kinds of expenses, and all these multiple kinds of expenses are categorized into different headings, okay, for our easy understanding. Okay, I am just going to mention those headings here. First heading can be your employee benefit expenses. Means any expenditure or any cost the business incurs in giving benefits to employees will come under employee benefit expense. For an example, it can be salaries. Okay, and the next one can be finance cost. Next heading can be finance cost. Now, what is a finance cost? We know what is a cost, but what is financing? Financing is nothing but arranging money to run the business. So if a business has to, if a joint stock company has to run the business, and for that if they need money, where will they arrange it from? They will arrange it in the form of debentures, or they will get a loan. So to get a debenture or loan, what is the cost that they will incur? To repay debenture or loan, they have to pay interest, correct? So this interest is called as the finance cost. So I hope you understood what is finance cost and why it is called as finance cost. And the next one is, the third one can be your depreciation and amortization expenses. We've been learning what is depreciation and amortization from a very long time. I don't think we will need an explanation on that. And apart from this, if the business incurs, or if a joint stock company incurs any other kind of expenses, all of them come under one common category called other expenses. So your other expenses can be like your rent that you pay, or if you're paying directors fees, or if you're paying if you're incurring advertising cost, and if you have bad debts, all that. So all of these expenses put together, I will sum this up and call it as total expenses, right? And let us say we will name this A and we will name this as B. Now what did we do here? To find out profit and loss, we expanded this formula, and what do we have to do? Income minus expense, correct? So A minus B will give us net profit or net loss incurred by the business for that particular period of time, correct? So now this is nothing but our statement of profit and loss. To find out profit or loss prior to incorporation. Basically, we will use this particular format throughout this chapter to find out profit or loss of the business prior to incorporation. So this is just an explanation or an introduction as to what, with help of what we will be finding out profit prior to incorporation. So we will take help of statement of P&L account. Clear? So from next video, we will be seeing the steps we have to follow in preparing statement of P&L. What all do we require to find out this profit? Clear? Thank you.